SGX Nifty indicated that we will see a muted start, and that indeed is how it's played out. If you look at Nifty Bank as well, that's also subdued, flat, in line with what the benchmark indices are doing. Let me take you through the list of gainers on the Nifty at this juncture. You have Power Grid, BPCL, Coal India, all of them seeing a sharp uptick in trade today, upwards of about 2%, followed by Bajaj Auto as well as Axis Bank. But on the losing side, you have Adani Enterprises, Asian Paints, Bharti Airtel, as well as Adani Ports that are declining. Along with that, you have an Hero MotoCorp as well that is seeing a tad bit of red on the screen. Let's break it down to individual sectors. Then is the metal sector that's seeing the most decline right now. Along with the media index, you have metal sector that's down about 1%. But on the flip side, if you look at the gaining side, you have PSU Bank Index, Oil and Gas Index. Those are the ones that are actually seeing some sort of a green on the screen at this juncture. So yeah, subdued start as you mentioned, but Ariraj, all focus is definitely on the commentary that you're getting on the global end, especially after what the IMF did yesterday, isn't it?
Right, of course. And the International Monetary Fund has rung the alarm bells for the global economy. The IMF has cut its forecast to global growth next year to 2.7% from 2.9% seen in July. Now, the international body says that it sees a 25% profitability, that growth will slow to less than 2%. The IMF has highlighted the efforts to manage the highest inflation in decades may add to the damage from the war in Ukraine and China's slowdown. The international body has also cut India's growth forecast for the next year by 60 basis points. Let's listen in to what the IMF's chief economist had to say on the world's GDP growth outlook.
The three largest economies, the United States, China, and the euro area, will continue to stall. In short, the worst is yet to come, and for many people, 2023 will feel like a recession. In the United States, the tightening of monetary and financial conditions will slow growth to 1% in 2023. In China, we have lowered next year's growth forecast to 4.4% due to a weakening property sector and continued lockdowns. The slowdown is most pronounced in the euro area, where the energy crisis caused by the war will continue to take a heavy toll, reducing growth to 0.5% in 2023.
All right, that's the commentary coming in from IMF's chief economist. But let's not forget, today we have a slew of economic data back home as well. You have India IIP data for the month of August that will be released. We are expecting the growth to be much lower than the month of July. But also, the most crucial one that we are expecting is the CPI inflation data, and we are expecting the CPI inflation data for India to come in at a 5-month high level. It will be above the 7% mark once again, and today at 5:30 is when we will have both these data points for Indian economy come in. That's at 5:30. So yes, CPI inflation is a crucial one to watch out for, and come tomorrow, you'll also have the inflation data to come in for the United States as well. So we have a lot of economic data that we are going to await for the signals when it comes to the economy and where it is headed from here on. If you look at what the currency market is doing currently, you have the rupee that is above the 82 to the dollar mark continuously. Yes, it had scaled that record low levels on the 10th of October, but right now it is around the 82.3 levels to the dollar. So let's talk more about where the economy is headed, where our experts are seeing the equity markets headed, and what sort of a trajectory are they seeing in for the Indian economy. So let me bring on board our experts for today. We have Kunal Bothra as well as Mr. A.K. Prabhakar joining us on the show. Very good morning to you, Kunal, as well as Mr. Prabhakar. Thank you so much for joining us on Buy Now, Sell Now. And yes, we are having a very different sort of a discussion on BNS and Lens today. We are not going to talk stock specific or sector specific, but talk about the economy as well as the equity markets as a whole and where we see this headed, because you have a lot of data points coming in, a lot of commentary coming in from the Fed officials, which is turning hawkish day after day. You have the BOE coming in with their policies, and every day you have a different news point where it looks like they're shifting their focal area. Also, you have the IMF that has sounded that warning bell right now, saying that 2023 they will see a recession. Where in such sort of circumstances where you have such negative commentary coming in from global commentators, where do you see our Indian economy and our Indian equity markets headed, Mr. Prabhakar?
Good morning. No, we are in a sweet spot. For us, yes, there is an impact because our export-related industries will do very bad. You take textile, for example. There are ground feeling that textile exports have dropped by almost 30%. So there are headwinds there. But when it comes to local economy, yes, it is doing very well. Your toll collection or your GST collection or your spending habits, which people have started to do post-COVID, that is doing very good. And government also has focused on Make in India using the TLI scheme, which is working out very well and in favor of India. When you have COVID lockdown in China and you have Europe +1 policy, China +1 policy, and Europe +1 policy, I think that is going to be very favorable for India in a long term and even in the short to medium term. And the infrastructure push which we are doing, which also benefits, which creates employment. So I don't think we need to be too negative. Yes, market will correct 8 to 10% or even higher correction is always possible. But we are biased towards sectors. Any sector which is towards India, which contributes to the growth of India, I think that is where we need to be there. So in that, we like banks, real estate, capital goods, defense-related stock. Even many specialty chemicals are backward integrated and forward integrated. So that reduces our exposure towards China. These kind of things we like. We like even retail, QSR, hotels. So I think you need to know where you are putting your money. The economy, yes, we will have an impact because of what is happening globally.
Right. Many thanks, Mr. Prabhakar. That was your view. Coming to you, Kunal, now. Now, despite the dollar index scaling new highs, the Indian rupee is hitting a new low. My question is, where do you see the dollar index headed and how much pain do you think is still out there for our currency?
Good morning, Adiraj. Good morning, everyone. Dollar index, I believe, is heading towards more of a topping out formation over here. 115 has been the previous high for dollar index, and currently we are trading at 113, 13.5 for dollar index. But the interesting part is that the indicators for dollar index in the recent charts have started to cool off significantly. So the RSI, for example, which was earlier at levels of 70, 75 for dollar index at an overbought kind of a zone on the weekly, monthly time frame, that has now cooled off to almost 60, 65. So even if the dollar index has risen from the 110 mark, the RSIs are not behaving in a very similar kind of a manner. This divergence generally happens when there is a topping out formation which occurs into asset classes. Now the topping out formation could actually come back or come true maybe in a matter of couple of weeks or at some point of time, maybe a couple of months. So we can expect that from here on, the rise in dollar index may not be converting as significantly into a sharp fall or a depreciation in terms of rupee as well as other currencies. But I believe once the dollar index starts to correct is where a larger part of the appreciation would start kicking into many of the currencies, including even the rupee as well.
Right. Mr. Prabhakar, let me actually put in one more question now to you. And given the fact that we are seeing such volatile commentary coming in, volatile moves across the globe, our Indian markets for now is pretty subdued, but you don't know what to expect till the day has not come to an end. And in such sort of a scenario, what should retail investors do to protect their wealth?
See, there are few things, which is very difficult. There are a lot of moving parts, but, we need to understand equity over a period of time has given very good return. So, normally I tell people now that, if you are not a good stock picker, then you have an option that, get into, index ETF, So you can do a SIP in index ETF and, there no application of mind is needed. It is just buying like, you buying Nifty or something, you can do that. Otherwise, if you want to be in India growth story, then banks is the best place. So you can, you can get into few banks where already their provisional numbers have come. So those provisional numbers are pointing out to a very good result. For example, HDFC Bank or your Federal Bank, there the growth has been above the total growth of the industry. So 19% is the growth which they have set on loan, Federal Bank. So these will do very well, and the results are there in the weekend. So post weekend, after seeing the result, you can also buy. So there are options, but you need to have some cash. Maybe 20-25% cash is always advisable. It will come in handy when a major correction comes in.
Right. Many thanks, Mr. Prabhakar. But Kunal and Mr. Prabhakar, please stay with us as we step into a short break. But don't go anywhere. Once we come back, we get you the queries and the rapid fire segment. We'll be right back.
Maybe later this summer, I'll buy more gold and silver.
Domestic is already at 60% capacity and going towards 80%. But we need more growth in international.
The voice that does not falter.
How do you convert this crisis into an opportunity? We will become stronger. We will survive this storm. With each passing day, this market is only telling you that if you've participated on every decline, you've actually made money.
Catch India's most experienced market anchor, Nikunj Dalmia, only on ET Now.
The rupee depreciation is only helping further that the seller of that commodity in India benefits.
Speculation is as old as the hill. We started off the correction with the scare of interest rates rising.
I don't think the sanctions go away within a couple of weeks. They will stay for some more time.
For anybody who has a 3 years time frame, I think next 6 months would give good entry points.
I think from a medium to long-term perspective, I think we should still be fine even from here.
Now things are exactly as what you had shared with us. We are staring at India like never before.
Absolutely. And people are not realizing it. I wish every Indian felt that. But time is that नास्तिक है उसको आस्तिक मत बनाओ, समय बना देगा.
For an SIP investor, next 2-3 years, is there a probability and a possibility of a double-digit return?
Although it's difficult to predict, return will be more than 10 lakh.
Nikunj, you are a very seasoned market observer, and therefore you may hit the nail on the head.
I think you have always kept the focus on the retail investor, and I think it's again a very apt, very good question.
Nikunj, first of all, thank you so much. You are one person I've always enjoyed interacting throughout last 15-20 years.
You know, the problem on coming on your channel is that you already know everything. I just heard your introduction. And what can anybody add to that?
It's not always about buy, sell or profit loss.
So after a gap down start, there is no buying.
It's about making you market ready with insights from the foremost market anchors.
Stocks open sharply. The Nifty Bank Index buying momentum has in fact come into the market.
And the views from top-notch technical analysts. Join them talking business, markets and earnings every trading day from 8 a.m. to 4 p.m. only on ET Now.
It's a daily grind that gets me going. Beating myself over the details. The tiny bits, the nuggets you tuck away. Somewhere you spot smoke and you look for the fire. At the end of the day, you don't want the froth. You want to skim the foam. and get your caffeine kick in a way that it hits that sweet spot. Yeah, just like a good cup of coffee. A real story with all the right elements that connects all the dots does not come in an instant. I'm Vikram Oza. Join me on ET Now.
Start your trading day with non-stop updates and uninterrupted trading ideas to power up your portfolio with unmatched experience and analysis from our market experts.
In the market right here in ET Now with
start trying to make a comeback. It's a smart start.
Sensex is up more than 400 points.
Management is now with us. Is it overvaluation case?
See that 17K.
Watch the opening show from 8 a.m. to 10 a.m. ET Now. Break free.
When you are India's most experienced market anchor, you don't just ask the right questions, you make statements.
With each passing day,
Welcome back. You're watching Buy Now, Sell Now on ET Now, and let's kickstart with the query segment. And for all of those who are tuning in for the first time, this is the segment and this is the show where we take all of your stock-based queries live. We do mention your name, the stock that you want to inquire about, the time horizon as well. And if you've already invested in a counter and you want advice on that, then they do mention the quantity as well as the price that you've purchased the stock, and do mention your time horizon. We are live on Twitter, Facebook, as well as on YouTube, and you can write into us on our WhatsApp number that is flashing on the top of your screen. So let me take this first query, and as always, Nino is the first one to write to us on YouTube. And he wants to know what is the long-term outlook for Asian Paints, and is it prudent to do SIP in Asian Paints? What's your take on this one, Mr. Prabhakar?
We are very positive on Asian Paints. You know, they have the 45% market share in their business, and with crude cooling down, I think their margin expansion also will play out this quarter. No, we are very positive, and long-term basis also, I think they will hold on to the market share. So it is a very good SIP stock. You can do that.
You, Kunal, Pratiksha is writing to us from Muscat. She's holding Polyplex Corporation at the rate of 2,300. She's asking what time is it the right time to average, and she wants a technical view.
So I would not say that it's the best time to average the stock because it's getting into a downward trend for itself. I think the last month, mid of September, start of September, the stock had broken below its 200 moving average after a long time for itself, which means that the correction which has been impending since long, I think that has started to take off for Polyplex. So I would suggest to wait out for maybe another few weeks or at least another couple of months. Let the stock at least show signs of reversal coming back above its 200 moving average. So that would be a point to try and buy the stock, not at current levels.
Okay, this one is from Bharat Makija, and he wants to buy Coromandel International at current market price. But he wants to know what should he do, and he's saying his time horizon is 8 years. So do you think for that longer term, Coromandel International merits a buy at current levels, Mr. Prabhakar?
I think so. No, short term there are pain points because most of our agrochemical is imported from Russia and other countries, where today due to geopolitical tension, it is not available. So, and government has few policies which is impacting all the agrochemical companies. But I think for a 8-year view, that it is a very good management, and this company has went on to buy many units abroad where they will secure their raw material thing. So I think that is something very positive for Coromandel. If you are looking for 8 years, then there is nothing to worry. You can start to accumulate that stock.
Right, Kunal, this one's for you. Money is writing to us from Chennai. He's asking whether he can buy Titan at current levels. He's asking for a medium-term perspective.
Well, yeah, you can look to start buying at current levels. 2,600 is where the stock is trading. Even though the stock has formed a double top formation, but I would expect the stock to get into a consolidation, and the range for consolidation would be possibly 2,550 on the downside as a support, and then 2,750 on the upside as a resistance. So we are coming very closer to that support point, 1%, 2% band in terms of the previous major low. So that would probably be a good point to start buying the stock at current levels. And even if you are trading from a short-term purview, you can be looking out for 2,750 as an immediate target.
Okay, this one is coming from Shiva Bharat and he wants your view on Thermax, Kunal. He's asking what are the charts telling you? Can you accumulate slowly? Or is there anything fundamentally wrong, reason for the fall from 2600 to 2000 levels? Yes, fundamentally, I'm sure you won't be able to comment on, but technically, how are the charts for Thermax looking like, and any reason why you may have seen that downfall or downtick in the stock price?
Well, not sure of the exact reasons why the stock is falling, but yes, the fall has been very sharp in the last 2 weeks. I think from 2650. The stock has fallen very sharply towards 2000, sub 2000 levels, and the candlestick pattern in which the stock has fallen, that has also been much higher. So it's managed to engulf almost the last 2 months of price action in this 1 week of sell-off for itself, which means that it's not a correction as such. It's possibly a start of a downward trend for Thermax. It's also the third week out of the last 4 weeks where you see the stock getting into a very sharp corrective mode. So even in that aspect, I would believe that there could be more correction in line for Thermax. Not sure of the exact reason, but purely on the charts, I would expect the stock to fall at least another 10% further from current levels. 1800 or sub that is where you can look to buy, provided the fundamental news flow is not extremely damaging for the stock price.
Right, Mr. Prabhakar, coming to you now. Chandrasekhar is writing us from Chennai, holding Strides Pharma, bought at 2,800. He's holding 2,800 shares of Strides Pharma that he bought at 461. He's asking whether he can hold or book losses.
Pharma, the bad time continues. I don't think anything major is going to change there. So no, if long term also it becomes very difficult because pricing power is not coming back to pharma. So no, I don't think in next 1.5 years anything major will happen in pharma. So I think if you are a patient investor, hold on. Otherwise, change the sector. Defense is a better sector where I think good performance, or you can make up the loss where what you are making in Stride Pharma.
All right, the next one is coming from Jay Krishnan, and Jay Krishnan is asking for a safe entry level for Ultratech Cement for the medium term. Kunal?
So I think Ultratech Cement is a good stock to hold on from long-term view. I think 6,000 is a good level to try and buy the stock at current levels. The indicators on the monthly charts just about 3-4 months back, I think in the month of June, had hit oversold territories, and from there the stock had seen a reasonable bounce. It's now nowhere closer to those oversold territories, but then just that 6,000 psychological mark rings a lot of positive bell for a stock like Ultratech Cement. So if you are in from a 3-year plus kind of a time horizon, then I think at current levels you can look to buy.
Right, Mr. Prabhakar, coming to you now. Debashish Bhattacharjee is writing to us from Kolkata, holding 100 shares of ICICI Lombard Insurance at 1,480. He's asking whether he should accumulate more at current levels. He wants a long-term perspective of more than 2 years.
I think it is one of the best in non-life insurance pack. So he can accumulate, but we need to understand non-life insurance. You need to be very slow because we need to catch up. GDP to insurance is very low in India. So it will take time. So if you have 5-year time period, then you can slowly accumulate.
Right, this next one is coming from Snehashish Gupta, and this is on Jubi Food. I like the way how it sounds right now. Jubilant Food Works is the counter, 620 is the buy price, about 100 shares. Kunal, can Snehashish hold or look to exit?
I would suggest to hold on to the stock at current levels. Now I understand that it's below your cost price of 620 odd, but then the charts have been very slow, gradual and steady for Jubilant Food. There could be a possibility that it may fall another 10-15 rupees from current levels, but just based on the patterns and the consistency as well as the stable charts for Jubilant Food, I would believe that any kind of a minor selling as well could probably get absorbed pretty quickly by the stock price. So I would suggest a hold.
Right. Kunal, this one's for you. Sadashiv Kamath is writing to us, purchased Miss Bector Specialty Food Products, 800 shares, 352 each. Looking for a short-term perspective, what should he do?
So I think today's, or rather yesterday's high, the stock has made around 390 odd mark. That seems to be a good enough resistance for the stock. I think on the short-term basis, I would suggest that closer to 380, 390 zone you can start, offloading or maybe selling off your quantity or booking profits into the stock and look to repurchase again if the stock comes back towards 350 levels. That could be a broad range for the stock over the very, very near term.
Okay, I have a couple of actually short-term queries. So let me take this one from Madhuri. 200 shares of SBI card purchased at 942 rupees per share, currently seeing a loss of about 8% on that holding. She wants a fundamental view on SBI card. Does it make sense to hold on for the longer term? And also if you could advise, does it make sense to average at these levels, Mr. Prabhakar?
I think, SBI cards is unique, in a way that, if you see the spend after they announced a 5% cashback, the spend has increased and it is the best increase in all the credit card space. And if you take Rupiah card, credit card linking with UPI, SBI will be the major beneficiary there also. So I think at current level, it is worth buying fresh also. So I think if you have 1 year, even 18 months time period, this stock should give you 30-35% return.
Right. Karan is writing to us from Delhi. This sounds to you, Kunal. He would like to buy Varun Beverages 100 share at current price for a short-term profit of about 5%. He's specifically asked me to ask you this.
Well, I think it could be a good bet. I think at 1,030.32 for Varun Beverages, it seems to be hitting back two important zones. One is on the price front. It's coming back towards the previous swing low. So that's a very important characteristic for Varun Beverages. On the daily charts, it's nearing, or I think it's just reached the 50-day moving average as well. There's a margin of 0.5% to 1% here or there from the average. And the indicators as well have come back into oversold territory. So when I look at the charts, there is a good prospect that the stock can rally up 5% purely from a short-term play.
All right, this one is coming from Manish Raju, 50 shares of IRCTC. He's purchased this last week itself, Kunal, at around 720 rupees per share. Now he wants to know whether he should add some more or exit the counter altogether. His view is for the next 3 to 6 months.
So I would suggest to hold on, but then averaging out for IRCTC should not happen unless the stock breaks past above yesterday's high. I think 747, 750 approximately is the high the stock had made yesterday. I think that's a weekly, weekly resistance for IRCTC. So you should ideally buy the stock when it gains back momentum, because IRCTC is such a kind of a stock which manages to thrive on momentum. So whenever there is a momentum which comes by, a breakout which comes by, the stock tends to perform exceptionally well, rather than buying the stock on the lows, and the stock could probably take a lot of time to consolidate at lower levels. So I would suggest to hold on to IRCTC, but then average or add quantity only about that 750 mark.
Right. Mr. Prabhakar and Kunal, stay with us. We're quickly slipping into a short break. We continue with the query segment when we come back, and also get you the rapid fire.
This market is becoming better, and with each passing day, this market is only telling you that if you've participated on every decline, you've actually made money.
If the normalization in the world will happen, demand which in a sense got destroyed will automatically make a comeback.
When you believe in India's growth story, you will be known for your acumen.
For long-haul FII who looks at India as still a promised land for consumption and for a growth revival destination, that pretty much is in the game. This crisis has surprised, I would say delighted, and has given birth to a new cult culture, both locally and globally.
Nikunj Dalmia, only on ET Now.
Hello and welcome. You're watching Markets at Noon. Midway through the trading day, we help you catch all the trading action
and get the bigger picture of the equity markets.
We help you screen through all the clutter and get you research insights.
Master the market sentiment during the most active trading hour of the day.
Get exceptional winning strategies from our technical analysts as well as expert views coming in from the market makers. Catch Markets at Noon every trading day only on ET Now.
Rakesh Junwala wants to go easy on trading. He does not want to trade as aggressively as he did, let's say, couple
but
of
I
years ago.
always used to, I have felt that for the last 25 years. कि क्या करो अभी छोड़ दो ट्रेडिंग में वो छुट्टी नहीं.
Once a trader, always a trader. Rakesh Junwala is a very quick decision maker. Some of our common friends tell me that you take a decision to invest millions in 10 minutes. You don't take hours, you take minutes. How does it work?
You got to catch the vital points. And second thing, remember you know, I want analysis paralysis. You're investing in a future which is uncertain. You cannot predict it beyond a point.
In individual sectors.
What's the sense that you're getting on volume growth?
Just clarify this entire case.
What is it going to mean for the business? What else are you looking at?
It was clearly one of the biggest deals.
Here, ET now have been getting you bit by bit.
The voice that instills trust.
My experience, based on what I've done in the last 20 years, these are the times where you don't panic, and if you stay committed to your financial planning, you will be rewarded. The bulls are saying, look, this is markets which are telling you that the future will be much brighter than what the past was.
The voice that commands respect.
You could remember that every bull market is higher than the last one.
The voice that is always ahead of the curve.
Maybe later this summer, I'll buy more gold and silver.
Domestic is already at 60% capacity and going towards 80%, but we need more growth in international.
The voice that does not falter.
How do you convert this crisis into an opportunity? We will become stronger. We will survive this storm. With each passing day, this market is only telling you that if you've participated on every decline, you've actually made money.
Catch India's most experienced market anchor, Nikunj.
Welcome back to Buy Now, Sell Now on ET Now. We continue with the query segment, and this one's for Kunal. Kunal, Anand is writing to us from Gurgaon. He has 130 shares of Godrej Property at 13.30. What's the chart indicating for Godrej Property? And he's also asking whether he can switch to DLF.
So, Godrej Properties was one of the first real estate stocks to correct. I think the stock actually topped out in the month of October 2021 when it was at 2,500 or 600 odd levels, and from there it's been falling quite sharply. But then, on the way up as well, there could be a possibility that Godrej Properties may actually bottom out first as compared to most of these other real estate names. And I, for one, believe that a much better name, or rather a formidable name from the real estate pack would probably be Oberoi Realty. So if you have to make a switch, then I would suggest switching off to Oberoi Realty. If not, then you can continue to stay put on Godrej Properties.
Okay. This one is coming in from KJ Singh, and taking KJ Singh, all of those who are tuned into YouTube and thinking I'm skipping the the queue. No, I am not, because there are a lot of short-term queries, and I'm fetching or fishing for long-term queries, and I've got this one from KJ Singh, and KJ Singh wants a long-term view on Bosch. He's already purchased it at the levels of around 17,000 rupees per share. He wants to know whether he should average at current levels, and what's the outlook for Bosch for the long term. What's your take, Mr. Prabhakar?
We are very positive on Bosch. When EV becomes a reality, I think Bosch will have a major role to play, because the German parent has a lot of EV connected equipments. So I think for a long-term investment, you can hold Bosch. But we like Sonacom for EV space. Sonacom and Mahindra CIE. These are two other stocks which we like.
Right. Mr. Prabhakar, this one's especially for you. Aarti is writing to us and she wants you to advise 2 to 3 good stocks in the QSR space for 1 year.
We like Jubilant Food, Barbecue Nation. These are our top picks there. Even we like Devyani Enterprises.
Right. This one is coming from Kaushal Jain, and this one is specifically for you, Kunal. He wants to know, where do you see ITC stock go after its hotel business demerger? As far as I know, the confirmed news of the demerger is not yet out. No doubt there are talks about it. The company has said that they will look to demerge the hotel business, but nothing concrete or official has come out from the board meet as such. Where do you see ITC headed from here on, not only based on this news flow, because then it will be, that's the time when you can talk about it. But for now, how does ITC look on the chart to you?
See, I think devoid of news flow is what you have to look out for, because such kind of conjectures, they generally get built in the psyche of the investor, but then we'll have to wait out for confirmations whenever that happens for stocks. But I would probably look out for ITC in a manner that the stock has outperformed in the worst of the market times as well, or rather in one of the toughest phase of the markets we've seen over the last many years. So ITC doing pretty well for itself on a YTD basis, as well as over the last 6-7 months, almost showing consecutive kind of returns for itself. So I think that's one of the key reasons why I believe that the stock can continue to move up higher. Now it's just that when there's too much of expectations and over positioning into the stock price, that's where the stock gets into a choppy phase, where the weaker hands, they tend to exit. The ones who have entered late into the stock price, they are the ones which tends to exit the stock price. So ideally what you should be doing is you should wait out for a phase of correction, maybe a sharp correction, say towards 310, 300 mark for ITC. That could be a point where you can look to average.
Right. Sudhin Kumar is writing to us from Ranchi. Stock, Godrej Property, bought at 1,393, 200 shares, short term for 6 months view. What should I do? Hold or exit? Kunal?
I would suggest to hold on.
Right. This next one is coming in from Mayank, and I am unsure if you track this counter by any chance, Mr. Prabhakar. Artemis Med is the stock. What Mayank is saying, that it is owned by Apollo Tyre Group. Have you ever tracked this one?
No.
Okay, I'm sure, Kunal, you haven't tracked this one, right? For sure.
Yes.
So let me take this next one, and it's a technical view on Oracle financials. Kunal, headed your way. 50 lots, short position from 4,000 levels. And Sagar is saying that he's just rolling over and over, and it keeps going down. Do you see further downside, or is it better to book out whether partial or full?
I think you should look to book out profits at current levels. And one of the reasons why I would believe that is because the selling in the IT stocks is not as prevalent as what it was maybe a couple of weeks or a couple of months back. Now, on the back of TCS results, there could be a renewed confidence which may come back into these IT names. Of course, based on the fact that other IT stocks as well start to show a lot of confidence in terms of results. And on the charts for Oracle Finance, I think the stock is also forming a bullish RSI divergence, or at least the RSI had started to show signs of a higher low formation for itself. That could probably be one of the other signals that maybe a near-term bottom could be in place for the stock price. So I would suggest to book out.
Right. Anand is writing to us from Dubai. Need a view on persistent system as the stock seems to be going on a downside. Bought this stock at 4,115 since it was expecting to move up with semiconductors production picking up. Mr. Prabhakar, do you want to take this?
You are talking about persistent system, right?
Yes.
Yeah, no, IT as a sector is not performed, but I think persistent for a long-term investor should not be a worry. When it will bottom out is something, it is very difficult when US is, they are talking about recession in US or slowdown in US. So if that happens, then everything in IT might correct. But that should not worry a long-term investor. It is a short-term phenomenon. Maybe in next 3-6 months, the US market also might bottom out. So I don't think we need to worry too much on short-term noises, but persistent is a very good stock to buy.
There's one more query that's coming from Sriram also, and he also wants to know whether he can buy right now. So you think persistent is a good buy at current levels as well for the longer term, Mr. Prabhakar?
Yes, that is what I'm saying. I like persistent at current prices, even if it corrects 10-15%, we should not worry. We need to buy it very slowly.
Right. This one is coming in from Vishal then. He's writing to us from Dubai. And he wants to know if it's good time to add JK paper at current market price for the longer term. He already holds some counter of some of the stocks at a price of around 439 rupees per share. What's your take on this one, Mr. Prabhakar?
We cover JK paper and we have been bullish from very long time. Now the stock has run up too much, almost 4x return it has given. So at current price also there is demand, but I would avoid paper stock at this point.
Right. This one's for you, Kunal. Anil Jaisingh is writing to us. He's asking whether he should hold Apar Industries, which he bought at 1,281.
Well, I think you can look to hold on. I would suggest to have a trailing stop loss. Now there is a possibility that the stock may initially first bounce back, say come closer to 1440, 1450 mark, and then get back into a corrective phase. So I would probably suggest is have a trailing stop loss as of now. Wait out for that 1450 levels to come back again for Apar Industries. That could be a point where you can look to book out full profits on your investments.
All right, this next query that I have is coming in from Manoj Kumar. Chennai Petro is the counter, Kunal, and he wants to know what sort of target can one expect for the next 1 year if he looks to buy Chennai Petro right now?
See, I think it's a tough one because Chennai Petro has been in the thick of news flow. I think start of 2022 when there was a lot of hype about the crude oil prices. That's where Chennai Petro did exceptionally well from 100 to 300, I think 400 in a matter of just 4-5 months. And then now on the way down, the stock has corrected from 400 towards 230 levels. So it doesn't look attractive to me on the charts. I would suggest to avoid such kind of names which are very, very high beta in nature.
Right. Slipping into a short break on that note, don't go anywhere. We still have the rapid fire round left. We'll be right back.
Dalmia, only on ET Now.
The rupee depreciation is only helping further than the seller of that commodity in India benefits.
Speculation is as old as the hill. We started off the correction with the scare of interest rates rising.
I don't think the sanctions go away within a couple of weeks. They will stay for some more time.
For anybody who has a 3 years time frame, I think next 6 months would give good entry points.
I think from a medium to long-term perspective, I think we should still be fine even from here.
Now things are exactly as what you had shared with us. We are staring at India like never before.
Absolutely. And people are not realizing it. I wish every Indian felt that. But time is that, नास्तिक है उसको आस्तिक मत बनाओ, समय बना देगा.
For an SIP investor, next 2-3 years, is there a probability and a possibility of a double-digit return?
Although difficult to predict, return will be more than 10 lakh.
See, Nikunj, you're a very seasoned market observer, and therefore you may hit the nail on the head.
I think you have always kept the focus on the retail investor, and I think it's again a very apt, very good question.
Nikunj, first of all, thank you so much. You are one person I've always enjoyed interacting throughout last 15-20 years.
You know, the problem on coming on your channel is that you already know everything. I just heard your introduction. And what can anybody add to that?
It's not always about buy, sell or profit loss.
So after a gap down start, there is no buying.
It's about making you market ready with insights from the foremost market anchors.
Stocks open sharply.
The Nifty
higher,
Bank Index is
buying
down
momentum has in fact come into the market.
And the views from top-notch technical analysts. Join them talking business, markets and earnings every trading day from 8 a.m. to 4 p.m. only on ET Now.
It's a daily grind that gets me going. Beating myself over the details. The tiny bits, the nuggets you tuck away. Somewhere you spot smoke and you look for the fire. At the end of the day, you don't want the froth. You want to skim the foam. And get your caffeine kick in a way that it hits that sweet spot. Yeah, just like a good cup of coffee. A real story with all the right elements that connects all the dots does not come in an instant. I'm Vikram Oza. Join me on ET Now.
Start your trading day with non-stop updates and uninterrupted trading ideas to power up your portfolio with unmatched experience and analysis from our market experts.
In the market, right here in ET Now.
Start trying to make a comeback. It's a smart start.
Sensex is up more than 400 points.
Management is now with us. Overvaluation case.
See that 17K.
Watch the opening show from 8 a.m. to 10 a.m. ET Now. Break free. When you are India's most experienced market anchor, you don't just ask the right questions, you make statements.
With each passing day, this market is becoming better, and with each passing day, this market is only telling you that if you've participated on every decline, you've actually made money. If the normalization in the world will happen, demand, which in a sense got destroyed, will automatically make a comeback.
When you believe in India's growth story, you will be known for your acumen.
For long-haul FII, who looks at India as still a promised land for consumption.
Welcome back. You're watching Buy Now, Sell Now on ET Now. Let me get going with the queries then. And this one is coming from Vijay Lakshmi. Vijay Lakshmi is asking about Praj Kunal. She's saying Praj is falling, but she is in 9% profit. So should she book out profits or continue to hold on to it? What's your take? And how is Praj looking on the charts?
See, I think it looks attractive now. The last couple of days, one of the reasons which at least I would probably attribute for the reason for the sell-off was because of the way the markets have been positioning themselves in the last 2 days. There has been a lot of yes and no for the markets, where there is some sort of a risk aversion or profit booking, which has come back into the indices as well as on the overall market. So I think that's one of the reasons why Praj Industries is also going through a correction. But then look at it this way, that this has been one of the best performers or better performers from the sugar pack from the 2020 lows as well as in the last 3-4 months as well. So there is always a scope that these leaders or outperformers, they would continue to outperform or lead the sector from the front. So you should be ideally invested into these kind of trading names. But then if you're circumspect that the stock may correct more, yes, there could be a possibility that may correct, maybe come back towards 400 levels. So I think the ball is in your court. If you're looking at it from a purely short-term play, then I would suggest to book out profits over here. You're sitting on a 9 to 10% profits. If you're looking at it from long-term play, only then hold on.
Right. Kunal, this one's for you. Macharia is writing to us. Sorry, the name is a little... he's writing to us. He has Vedanta 350 shares at 263. Can he expect for a 350 level in 3 months?
Well, 350 would be a bit of a tough task given the kind of market scenario we are into right now. The metal sector has not been a strong breakout sector as such. So I think in that regards, I would probably expect Vedanta to remain more or less in a range bound. I'm not sure the recent announcement on dividend for the stock price, but then looking at the price action so far, I think 300, 310 could be a modest target which you could be looking out for Vedanta.
Okay, this one has come from Vincent Sundar, and this one is headed your way, Mr. Prabhakar. He is saying Tata stocks like TCS, Tata Consumer, and Tata Motors are now in Tata mode for his investments. He's a long-term investor. He's saying, should he continue to hold on to it or cut losses, because he's already facing losses of approximately 3 to 10% range in these investments that he has in the Tata group of companies. What's your take on this one? Don't be perturbed by these minute losses and stay put with these holdings for the longer term?
I think we would have bought it recently. Tata stocks have given very good return over a period of time. So he's a recent investor, but I don't think you should worry. But Tata Motor is a very tough stock for anybody to understand. They are in almost 7 geographies, and understanding all these 7 geographies is going to be very tough even for an analyst. So I think Tata Motor one can avoid, but other stocks are gem in Tata pack. You can add even Tata Chemical. Titan is also one more. Trend is also there. So I think these are stocks which will give return over a period of time. Now, for Tata stock, 1-2 years is very short term. You need to have 5 to 8 years view.
All right. With that, let's actually kickstart with the rapid fire then. And quickly, let me take this query then to you, Kunal. This one is coming from Dasar Reddy. 200 shares of RailTel at the price of 126. Should he hold or exit?
Exit.
Right. Shailesh from Tirupati holding 14 shares of Alcalaman at 2,986. Should he add more shares now? Mr. Prabhakar?
I think it is a good hold for a long-term investor.
Okay, Pramod is asking about Tourism Finance Corporation holding 1,000 shares at an average price of 74. Should he hold or book loss, Kunal?
I think you should hold on. Potential of a breakout, but then I think that could probably take another at least 3 to 6 months. So if you have that kind of a time frame, hold on.
Right. Thomas P. George writing to us, 100 shares of Tata Elxsi bought at rupees 950 per share. What should he do? Sell, hold, Kunal?
Well, you're sitting on great profits for Tata Elxsi if you've bought the 950 levels. Good time to book out.
Okay, let me just squeeze in the other one then. Niyati also has Tata Elxsi 2,940. Hold or book out?
I would suggest to book out.
Mr. Prabhakar, this one's for you. Ram is writing to us. He has Thyrocare at 1,065. He's saying, what should he do in the long term?
I will exit.
Okay, this is from Ravi Chandran from UAE. 50 shares of HDFC AMC at 2,500. Should he hold for a target of 2,800 for the next 6 months to 1 year, Kunal?
Yes, I think you can continue to hold on.
Kunal, this one especially for you. Christopher Pierre is writing to us from Goa. Technical view from you on Dr. Lal Path Labs bought at 3,860. Divi's Labs bought at 4,942 and HDFC AMC bought at 3,004 for the next 6 months.
So HDFC AMC, I just voiced my opinion. Divi's Lab is a good buy provided you have a long-term in kind of a time frame, but then have a staggered approach for both Divi's Lab as well as the Dr. Lal Path Labs.
Okay, Matthew from Muscat is asking, is it advisable to buy Nykaa at current levels for the long term? What's your take on this one, Mr. Prabhakar?
Nykaa, I'm not a fan of these kind of new listed stock or new. I will avoid.
All right, and with that, we actually come to the end of the rapid fire as well as query segment. Thank you so much, Kunal, as well as Mr. Prabhakar, for joining us on the show and helping resolve our viewer queries on stock-specific stuff. But with that, we are totally out of time on this edition of Buy Now, Sell Now. But stay tuned. You have Markets at Noon coming up next. But for now, goodbye from Adaraj, myself, and the team that put the show together.
And for a growth revival destination, that pretty much is in the game. This crisis has surprised, I would say delighted, and has given birth to a new cult culture, both locally and globally.
Nikunj Dalmia, only on ET Now.